Welcome back to the deep dive. Today we're shifting gears a bit. Not the usual economics, but something maybe more intense.
Definitely more intense. We're heading into the world of financial trading, but focusing really tightly on the psychology.
Right, the relationship traders have with, well, data. Tons of it.
Exactly. Our mission today is to really look at why traders get so deeply, almost compulsively, involved with the constant stream of numbers. We're sort of dissecting the data junkie mindset.
Yeah, trying to understand why chasing these numbers becomes, less about strategy and maybe more psychological.
Precisely. The sources we looked at really dig into this, moving past just how markets work and into the brain chemistry involved.
Okay, so why this magnetic pull towards the screen, the P&L updates, the tiny price ticks, the stats?
What's the actual payoff for getting so buried in all that information? That's the core question, isn't it?
It is. Okay, let's try to unpack that. Where does this obsession start? What specific data are we talking about?
Well, it's data that gives immediate feedback. We're not talking about waiting for some quarterly report. It's instant.
Like the P&L profit and loss. Most people know what that is, but for traders, it's different.
It's very different because it's updating constantly,
Right.
like second by second. It's this incredibly volatile, real-time scorecard of how you're doing right now.
Wow, okay. That's intense.
And it goes even smaller.
Hmm.
Think about pips percentage and points.
Those tiny price movements.
Exactly. The smallest possible shifts. And traders can get absolutely fixated on tracking them. It represents immediate change. However small, it feels visceral.
So it's not just the big picture, it's the micro level too. What about things like screeners?
Screeners are interesting. They're these tools traders use to filter and rank assets, stocks, whatever.
Right.
But they're not just lists. They're often these really complex, custom-built systems.
Yeah.
An attempt, really, to impose some kind of order, find predictability across thousands of possibilities all at once.
It sounds like trying to control the uncontrollable almost. Like you said, it's the immediacy. Checking your bank balance once a week versus an app that alerts you every single time a penny shifts.
That's a good analogy. The intensity is just on another level.
Which leads to the big question. If they're constantly watching these numbers, and let's be honest, numbers often bring bad news or just noise, why keep doing it? Why does it feel less like diligence and more like, well, an addiction?
That's the crucial point. What makes this kind of data, financial data, potentially more addictive than, say, checking your social media feed or even a video game score?
Okay.
The mechanism seems to be what psychologists call intermittent reinforcement.
Ah, right. That's powerful stuff. It's not the guarantee of a reward, it's the unpredictability that gets you hooked.
Exactly that. Think about the classic experiments. A rat presses a lever. If it gets food every single time, fine. But if it only gets food sometimes, unpredictably.
It keeps pressing the lever way more obsessively.
Precisely. That unpredictable reward makes the behavior much stronger, much harder to stop. And trading, it's basically the ultimate intermittent reinforcement machine.
So you're tracking your P&L, watching the pips, running the screener.
Right. And most of the time, maybe nothing much happens. Or you take a small hit. But then, sometimes, that data chase leads to a big win, or you spot a pattern that actually works.
And the brain gets this huge rush, a dopamine hit.
Yes, but here's the interesting part. The dopamine isn't just for the win itself. It's strongly associated with the seeking behavior, the anticipation under uncertainty.
So the brain is rewarding the act of staying glued to the screen, refreshing, hunting for that next unpredictable payoff.
And because it's real money on the line, the stakes feel incredibly high, which likely amplifies that chemical reward. The brain starts to think, this tracking, this constant vigilance is essential for my success, maybe even survival.
Which just reinforces the idea that the answer to the market's chaos is more data.
It becomes this addictive feedback loop. Keep searching, keep tracking, because maybe the next refresh will be the one.
Okay, so you have this powerful chemical driver. Then you layer on something else you mentioned, pattern recognition, that aha moment.
Right. Finding order in chaos is, it's a deeply satisfying human experience. Markets often feel chaotic, random even.
But the brain hates chaos. It wants patterns.
Exactly. So when a trader studies charts, looks at stats, runs their screener, and suddenly sees something, a trend, a cycle, something their system flagged, it's not just data.
It's validation.
Profound psychological validation. It feels like confirmation of their skill, their intelligence, like they've momentarily beaten the chaos, understood something others missed.
So they're not just placing a trade, they feel like they're outsmarting the market itself.
And that feeling, That validation, it fuels the whole cycle. It makes them want more data, more granular information to find the next pattern, maybe an even harder to spot one,
So the data stops being just a tool for analysis.
and starts becoming a source of emotional and cognitive reward in itself. The search provides the hit. They shift from being an analyst using data to becoming, well, a data junkie needing it.
Okay, this is where it starts to sound dangerous. Because clearly there must be a point where gathering more data stops helping and actually starts hurting.
Absolutely. And this is what the sources really get into, the dark side of data, you could call it, the paradox.
Paradox being.
That the very data you seek for clarity and control can end up causing fixation and paralysis. There's a definite tipping point.
When does that happen? When does tracking become over-analysis?
It seems to happen when the need for certainty, for just one more confirmation, overrides the need to actually make a decision.
Analysis paralysis. Or analysis creep, maybe.
Yeah, analysis creep is a good way to put it. You start with, say, 3 indicators you trust, but then doubt creeps in. So you add a fourth, then a fifth.
And soon you're juggling 7 different models, watching multiple P&L streams, cross-referencing everything.
Waiting for that perfect alignment, that moment when every single signal says, Joe. You're searching for 100% certainty.
Which, in fast-moving markets, basically never happens.
Exactly. Markets don't wait. So by the time you've gathered all this extra data, much of which might just be noise, irrelevant micro movements, the opportunity you were initially tracking,
It's gone. Poof.
you end up paralyzed by the sheer volume of information you desperately wanted, overwhelmed by the complexity you created.
You know, if you pull back from trading for a second, this sounds like a much broader issue. Information overload in general.
It really is.
We all kind of do this, don't we? Equate knowing more stuff with actually understanding things better, or being able to act more decisively.
That's a great point. The search for certainty can become the goal itself, rather than using information as a guide for action. And that's when we stall, whether it's in trading or any complex decision.
So for the trader, this data obsession, this constant seeking, it's really a way to cope with the market's inherent uncertainty.
It seems to be, fundamentally. It's an attempt to gain control over something inherently chaotic. But when that internal search for certainty keeps failing, or leads to paralysis,
They look for control elsewhere.
often, yes, they might try to solve the internal psychological problem by maximizing external control, which leads to something fascinating our sources mentioned.
Ah, the physical side of this, what they called hardware envy.
Exactly. It's how this deep psychological need for total information control can manifest in the physical world. Think about those extreme trading setups.
Yeah, the ones with like 6 monitors, specialized keyboards, super fast internet.
Right. Now, some of that is certainly about efficiency, but often it goes beyond that. It becomes a visible symbol of the need for absolute information containment.
Like if I can just see everything all at once on all these screens.
Then maybe I won't miss that one crucial piece of data. Maybe the overload I feel inside can be managed if I just have a bigger, better, faster external system to capture it all.
So the massive setup isn't just about workflow. It's kind of a physical defense against the feeling of being overwhelmed by the data. Trying to build a fortress around the information flow.
It certainly seems to reflect the level of anxiety. If the internal analysis feels like it's failing, maybe the answer lies in more screens, faster connections, more processing power. It becomes a sort of tech arms race.
Driven by that fear of missing out. Missing the one data point that changes everything.
MIDPATCE. Missing the data point that changes everything.
Yeah, that fear seems central. The need for maximum screen real estate for charts, news feeds, screeners. It's like a physical attempt to map and control the market's invisible chaos.
I can relate to that impulse, actually. Not the trading part, but, feeling like buying the latest gadget will magically solve a productivity issue or an organizational problem.
It's trying to use an external object to fix an internal loop, essentially.
And that loop you described earlier, the seeking, the dopamine, the potential paralysis,
Yeah.
it sounds exhausting.
It is. It's a constant tightrope walk, trying to use data effectively for insight versus getting sucked into that addictive psychological pull of just chasing numbers and patterns. It leads to stress, burnout, anxiety-fueled decisions instead of logical ones. So wrapping this up, what does this mean for, for anyone trying to navigate complex information and make good decisions, not just traders?
I think it means you have to be really aware of your own internal reward systems.
Yeah.
Constantly ask yourself, is this search for more information genuinely helping me get ready to act?
Or am I just enjoying that little satisfying buzz of finding a pattern, refreshing the score, getting that little hit of knowing?
Exactly. The big lesson from the data junkie archetype is that consuming information isn't neutral. It taps into these powerful seeking and reward pathways in the brain.
So you need to discipline.
Discipline is key, knowing when to say, okay, I have enough. When to turn off the alerts, close the tracker, trust the analysis you've done before that pursuit of perfect certainty pushes you into paralysis.
That makes sense. And building on that idea, exhaustion and trying to control things externally, here's a final thought for you, the listener, to maybe chew on.
Yeah.
If the data junkie struggle is all about managing chaos and needing control, and they invest heavily in these complex external tech setups to feel secure, what happens when that technology inevitably fails? A power cut, an internet outage, a system crash. Does that physical system, the one built to reduce anxiety, suddenly become the single biggest source of pure panic when it goes down? Think about the vulnerability you create when you try to physically contain something fundamentally uncontrollable.